Yo, hope y'all are doing good. This video is going to be over fair value gaps and how to use them. Let's get right into it, not looking to waste anybody's time. So what is a fair value gap? A fair value gap is a price imbalance made in a 3-candle pattern. You can notice here we have a bearish gap. It is a low and a high that creates a gap with this overlapping candle. The same thing for bullish. I'm not going to spend too much time on that. Okay, content covered. What can you expect for this video? Well, all uses for fair value gaps, how to find the best fair value gap, and then how to use that best fair value gap before an entry. So what are the uses? Well, obviously, as I just said, the entry using a high time frame fair value gap as your key level for your inversion fair value gap setup, or like CISD, whatever. I use inversions, so that's all I'm going to be talking about. And then targets, using an unmitigated fair value gap as a target. Yes, you can use fair value gaps to distribute price, and you can also use fair value gaps to attract price. So your target could be liquidity pools, such as that unmitigated fair value gap, and then it's a good target because price wants to rebalance. Like, there's a reason to go to it. And then narrative, you can use fair value gaps on the high time frame to build your narrative, like disrespecting versus respecting. How is price reacting to bearish gaps? How is price reacting to bullish gaps? I'll get into that in a second. Not really any examples to go over. And then quality of price action. If you go through like the first 20 minutes of price, like let's say 9:30 open, and there's no fair value gaps, especially on the 1 minute. But if there's no fair value gaps on the 5 minute, the 1 minute, like everything's just chop, guess what? Probably bad price action. But on the opposite side, if we have a ton of fair value gaps, we're leaving in balances, price has that volatility, that's a very good sign of PA. So you can use fair value gaps to gauge the quality of price action. All right, so the quality of a fair value gap, how do you determine it? Well, these are the 4 things that I'd say are the most important: premium, discount, the size of the fair value gap, size of the fair value gap, the mitigation, and the distribution. Where are we going? So premium, discount, obviously bullish gaps in a discount are good. Bullish gaps in a premium aren't as good. You can still use bullish in a premium. You just have to have a bunch of other stuff very, very like high quality to like pick up for where it lacks, you know. And then the same thing for bearish. Bearish gaps are already good, but a bearish discount gap, it's okay. And then the size. Obviously, you want a bigger imbalance for more orders filled, because smaller imbalances do what? They offer less price to fill orders in. And then mitigation. So these are gaps that have like been interacted with time and time again, and the imbalance has been filled. So this imbalance that fills orders is gone because it's mitigated. We've like price has been there, the orders have been filled. We can't just keep refilling them, you know. So mitigated gaps as your key level, and they're not the best. Why? Because they're going to offer less orders. But with unmitigated gaps, they're going to be great. Why? Because it's fresh. It's like it's a fresh fruit that you just pulled off of a tree, right? It's going to have all of the stuff you need. It's not a used fruit that's been eaten by half the village, right? Who wants a pass-through fruit? I don't want it. And then distribution. If fair value gaps, internal range liquidity, distribute to liquidity, ERL, your fair value gap must have a liquidity pool to distribute in a logical reason of why. So an example of this would be like, okay, we have a 4-hour bullish fair value gap, and we have London highs above. Okay, that's my fair value gap, that's my target. But why should we go to these London highs? Well, the high time frame trend is bullish. The daily profile is bullish. Let's say it's like Asia accumulation, London also accumulated, and now you'd expect New York to do the manipulation and distribution. On the high time frame, we're also consistently disrespecting bearish gaps and respecting bullish gaps. So interacting with this 4-hour bullish gap at 9:30 open, I can expect this sequence to repeat itself. And then we respect the bullish. And then obviously like LR, low resistance at London liquidity. Basically, there's reasons why price would want to take out this liquidity pool. So that's the why, and I'll get into that in a second. And then high time frame for value gaps for entries. Well, the same thing that I was just going over, the why. This is like very important to actually get that good entry. Why should this gap distribute? Why should this setup win? Well, we have to take that liquidity. Literally what I was just saying. Here's an explanation of that, like, okay, why we do this, what fair value gaps do. Here's a little video link for y'all. I'm not going to get into that. That's a whole different video. Watch that if you like. And then obviously aligning with a high time frame DWL plus logical price. Literally just what I went over. And then which fair value gaps do I use for these for these inversion entries? Well, you want to use high time frame fair value gaps, and that starts with 15-minute minimum. 5-minute gaps do not count as a high time frame fair value gap. So that's your key level. Fair value gap obviously aligns with high time frame narrative and has a Y for distributing. And then if you're wanting to use that 5-minute continuation gap, the move must be started by a high time frame fair value gap. So like let's say the move starts here, we run lower, hit a high time frame imbalance like a 1 hour, have this leg up, create a 5-minute. That's a 5-minute you can use because the move started with that 1 hour fair value gap. And then here are some examples. This is just like good fair value gaps, bad fair value gaps. So obviously right here, this is a good fair value gap. Well, it's a large fair value gap, so big imbalance. It offers a discount, so this 0.5, so 0, 1.5 offers a discount inside of it. Easy targets above. Its previous day high in an unmitigated 4-hour gap. And then notice the wicks on this liquidity pool, not aggressive. This is likely a consolidation, not manipulation. And then obviously follows the trend / displacement. And you can see that for all of these. I don't really want to like go into a word dump here. I do want this video to be short because it's literally just for value gaps. But again, what is the context? Okay, we have a liquidity sweep. We have a high time frame imbalance. There's no reason to go lower. Because why do we go anywhere in the market? Well, to take liquidity and to fill imbalances. Well, in here we took liquidity, filled an imbalance. There's 0 point to go lower because the liquidity at this low, it hasn't really built up yet. So there's no point in taking it. But then obviously large imbalance offers that equilibrium. We don't actually tap equilibrium, but it's offered, so that's good. Aligns with a high time frame trend, smooth highs above. That's just your liquidity pool. And then why is this bad? I do want to go over the bad setup. Well, this fair value gap is bad because where is it going to go? We just swept out all of this liquidity over here, and hit a high time frame imbalance. There's no reason to return there. What is at this low? Well, there's no liquidity, and there's no imbalance below it, or no imbalance that needs to be filled below it, so there's no reason to go there. Yeah, we can, but that's just going to be a weird move. And then on top of that, this fair value gap is in a discount. It's bearish, and above it, look at all these highs. Look at those highs. That's just like smooth wicks. Like this is accumulation. Look at this over here. Notice how we kind of like leave smooth lows here, kind of smooth over here. The same thing for this liquidity pool. So that's a strong reason to go higher, with a very strong reason not to go lower. So that's a bad fair value gap. And that's it. I really wanted this video to be short. I don't want to waste your fucking time with fair value gaps. If you did enjoy this video, leave a like, subscribe, because I'm gonna just be making content like this, like super fast, informative content for y'all. So yeah, if you enjoyed, let me know. If you have any suggestions or requests for future videos, also let me know. And yeah, have a great rest of y'all's day.